delve into the banking domain. And the topic of the session is the lessons for the risk underwriters from the technological disruption in the banking. And to chair the session, can I please invite Dr. Tarun Agarwal, Director, National Insurance Academy of India, on the stage, please. Hello, Doctor. Can I also invite our panelist, Mr. Kaushal Todi, Director, Consumer Success Account Management, Microsoft India, Mr. Praveen Dash, Founder, MD and CEO, Arthan Finance, India, and Mr. Gyanandra Mishra, Founder, MD, CEO of Saksham Gram Credit Private Limited. Can I request the panelists to join on the stage? Can we have a good round of applause for the panelists, please? Will request Dr. Agarwal to kickstart the session.
So floor is all mine? Floor is all mine, yeah. Thank you. Wonderful. So good afternoon, everyone, and such a lovely audience. I'm so thankful that all of you are so hungry about knowledge and not about the food. But I'm sure I'm coming in between the food and this panel, so we'll not take much of this time. I have with me, three eminent people, highly knowledgeable, and incidentally, most of them are bankers, and they're into different fields. But before I start, I must say that we are going to deal, and we are talking of risk here, and that's what I understand when I talk of actuarial science or actuaries. And before I formally start, I would like to thank Natasha for doing that wonderful job there, and she'll be like hearing words and drawing the entire panel stuff, so that is something, a great ability a person has. I would like to have a big round of applause for her. She has been silently doing a great job. Thank you so much. So, as we all know that, India is bustling with, and building marketplaces with a lot of disruptions. But as we say that so many startups, so much marketplaces being developed, the rules are, shifting like a desert sand. And the rules of the game are just changing. So this is an exciting times, I would say, and as the sand moves, as the regulations move, the innovations are also taking it a challenge and moving ahead and are being catching up with the pace. So as the conference goes, data is the new oil, and disruption is what we are all going to talk about. And the actuaries, well, it's the time. We all need actuaries, and in India, as I hear, as I know, we have roughly around 650, 700 of them, whereas the requirement is roughly around 1,500 plus. So every field in India now require an risk analyst or an actuary. So while I say that, I must thank the IAI for inviting all of us. Before I start, I would like to request my fellow panelists to introduce themselves so that you know what is the flavor of this panel you're going to get, what are you going to hear. But definitely the panel is going to work under the overall umbrella of banking underwriting, lending, credit risk, sandbox, regulator. And so you will be hearing about all these words a couple of times. And the experiences of my friends here who are, well experienced, I would say. All of them sitting here are having more than 20, 25 years plus of experience here. So maybe Gyanandra ji, I would request you to start, introduce yourself, and then move on to Pravash, and then to Kaushal. Just 2 minutes or whatever time you think, 2 to 3 minutes, just introduce your organization, your flavor, what you want to give.
Am I audible? So this is Gyanandra Mishra. I take care of Saksham Gram Credit Private Limited, which is a business correspondent for Bharat. When I say Bharat, means rural India. I worked for almost 3 decades in BFSI sector. I worked for 3-4 years in capital market. Then I shifted to banking. In banking, I had been a consumer banker. Consumer banker by accident. By choice, I am the micro banker. And that is the reason I am into microfinance, working for few banks as business correspondent. We have seen metamorphosis change happening, every day, every new day is new day, innovations, technological disruptions are happening. We have seen pure physical banking from physical to phygital. Now people have started talking of digital. I don't know for how long it will take to change from physical to digital, but time ahead is fantabulous, enjoyable time. I always say it's triple E time. That is, everybody needs to have a cross education. When somebody is studying in actuarial, he should also know how to penetrate the market and be the salesperson, and how to be underwriter and how to take care of the operations. So today is education. Second comes is, education is important, but if your environment is not alive, your education is of no meaning. So, and the third one is ethical leadership. That's very important. That's the triple E, I believe in. And we try that each and every, Saksham talents, we say Saksham talents in Saksham Gram. Each and every Saksham talents should think of miles to go to impact billions. I mean, that's the thought process we have. Now I'll give it to Pravash.
Hello. Yeah. Thank you. I'm Pravash Das, founder of a fintech NBFC called Arthan Finance. So in Arthan Finance, it's a lending tech. And what we do is we fund to the underserved, unorganized MSMEs in India. So when you look at, there are 65 million MSMEs, and most of them, nearly 95% of them are either not funded, or they are not eligible to get fundings and all, because there is no data, and a lot of things which we'll discuss later. But yeah, so primary focus is to give loans to those underserved MSMEs. And we use a lot of data. So while today's topic is on data and all, so we use a lot of data for this segment, which is not directly fetched from them, because you don't find those data with them. But yeah, so we use a lot of data, alternate data, machine learning, AI-based algorithm to underwrite those cases. And having personally nearly 20 years of experience setting up either a vertical in a bank or NBFCs in past. Thank you.
Kaushal.
Yeah, hi. Can you hear me? Yeah. This is Kaushal. I work with Microsoft. And I basically believe that data and the amount of data that we are getting, especially in India, is the second largest outside of China, right? So now if you look at it, the kind of digital innovation this sector is going to see is unparalleled to anything. And if I understand this domain good, I believe that the kind of data analytics that each one of you do today is humongous. So digital is going to be the technology which is going to help you. AI, Gen AI, and different other models that are coming in is just the start. And those models will become more precise as more data comes in. And we'll talk about that during the period that we have. But very excited about the conversations that we are having with varied segments in insurance, and we believe that we have yet not touched the tip of the iceberg. So there's a lot of it that we can do in this particular sector.
Thanks, Kaushal. To begin with, as as their examination starts, let me tell you, the questions have not been divulged to them. They are going to be in a spot here. So as you all know that, technological disruptions have profound implications for risk underwriters who assess and mitigate risks associated with lending and investment activities. We see, a lot of aspects and words and, sentences coming around that is the regulatory Rubik cube, the global governance gap, and the gap, innovation versus protection, anti-money laundering and the shadows, taxation and revenue shadows, the regulatory race to the bottom, the evolving tech target, lack of the public trust and transparency, consumer protection and knowledge gap, and last but not the least, the innovation chill factor. So keeping all this in mind, I would like to put on one first question to Kaushal. So the question to you, Kaushal, is that, how can underwriters integrate the alternative data sources, such as social media and IoT data, into their risk assessment models while ensuring accuracy and compliance? Your views, please.
Oh man, you picked me first. Thank you. So, audience, this is very pertinent, right? And the amount of data source that you have today is just going to increase exponentially. And if you look at why, because each one of us, whatever we are doing, in some form and shape, is sourcing data to the analysis, right? You may be using your mobile phone, you may have a smartwatch. All of that, in some form and shape, is getting tracked and will be used by the profession here, right? So the amount of data is going to increase. So when I was actually talking to varied specialists, and I by myself have a framework, and I believe that framework works the best. So when you are getting into a dilemma of how many data sources, which data sources, should I take this or not, I think you should take 2 steps back, or maybe 4 steps back, right? You should really look at why are you wanting to take new data sets, right? Look at the risk that you're evaluating for a particular audience, right? And look at the current data that you have, and how is that data helping you to meet the objective, right? And that objective may be good enough, but then keeping the ultimate objective of user experience and how you can do risk assessment better, right? You should look at what are the gaps that you have. And that by itself will give you a good analysis of whether you should look for a new data source or not, right? So don't just pick up a data because it's there available for you. A lot of times I've seen that to be the primary flaw. So I would request each one of you to kind of take 2 steps back and then take the next step forward, right? Then it also depends on what kind of data, right? Understanding the data. What's the validity of the data? Is the data reputed enough? Sometimes you may have data which may look very relevant in the first look of it, but it may not really be. So I would request you to do some analysis there, look at what's the genuineness of the data, right, and the representation. So please take time there. And then I'm seeing a lot of people do a lot of tests. The models that you create should be tested, should be going through the proof of time, and time is not enough. So what you have to do is you have to break it into chunks, and you have to make sure that you kind of test it enough around different modalities. And once you do that, a lot of my friends over here who were there on the dais, they spoke about fairness of data. They spoke about ethics, legalities. There are a lot of regulatory compliance. So look at data privacy, for example, right? DPDP is a big aspect. Look at whether you are paying attention to that. I think that's the key aspect, and if that's not taken care of, right, it will be difficult for you to get the right output of the model that you want. And finally, speak about the benefits, because if you don't speak about the benefits, right, all the efforts that you have put on having the new data is not going to help you. It's just going to increase your, work. The kind of output that you want is not going to be there. So I think these fundamental things around the framework is going to be important when you're actually looking at any new data source. And the amount of data that you can get could be from an IoT device, it could be your wearable, it could be something else that you may not know, right? It could just be an app that you're using on your phone, right? It could also be your social media accounts. So from that perspective, just be observant of whether you want to consume the data or not. So Tarun, I think that should be good.
Yep. Yeah. Thank you, Kaushal, for sharing your views. So, audience, there is a special prize. So keep your questions ready. There is a special table booked for your lunch, which will be separate, and you can enjoy it comfortably. So keep your questions ready. And there are other prizes also, if you ask as many questions as you can. So my second question, goes on to you, Pravash, as you are mainly dealing with credit underwriting and risk. What I think would be that, considering the recent data breaches, how can risk underwriters enhance their strategies to address cybersecurity risks associated with technological disruptions in banking and other aspects related to credit underwriting and risk, which you would like to add and share with our audiences here? And
So,
how actuarials can come actually into businesses and help on the MSME and the businesses which you are running?
sure. So, the first thing is why we collect data, and when you talk about whether it is a bank or the insurance companies, when they do the underwriting, what are the things they look at? They primarily focus on two things. One, the perceived value of the things, and two is the perceived risk. How do you manage both the things together? And then as rightly we discussed that there are plus of data which are available today. Whether, if you look at the personal data, like the amount of data we generate through UPI transactions today. So those are the transaction data. And if you look at banking, job was always a mundane and it was a boring job. So now the data has added a lot of luxury to it. We get a lot of data which helps us to interpret the risk in a much better way, and also we take call accordingly. And everybody here, whether you avail insurance or you avail banking services, whether it is a loans or the savings or any investment product, everybody wants very personalized offerings. Nobody wants the generic product which is available. So when you look at anything which is personalized, you need a lot of data to be processed, a lot of personal data to come in, and then you probably offer those personalized products for everyone. So to do that, you have to expose your personal data. And there is no way without exposing your personal data, you can get personalized services. But at the same time, as an underwriter, as an organization, how do I want to protect your data? That's the paramount for all the organizations. So even the DPDP acts or the regulators, everybody put forth these compliance related things to all the organizations to protect the data. And and accordingly, everybody has to create those infrastructure in place, whether it is creating adequate infrastructure, putting different purging systems in place, giving access to giving data access to individuals where you are collecting the data, keeping the consent management in place, and also giving the rights to the customers to erase the data as and when they require. So these are some of these hygiene factor everybody has to look in to create, use this data, and as well as give the control to the customers for their data when they want to that to be used, or if that can be deleted and all. So these are some of the things which we can look at while doing the underwriting and creating a larger ecosystem which is much safer for everyone to share and make use of the data judiciously.
Thank you, Pravash. Coming to you, Gyanandra ji. So on a on a related note, as Pravash and Kaushal mentioned, so how does the recent compliance lapse of a large digital bank mean for players to prepare for Indian regulation My question would be, how regulatory sandbox in insurance and maybe banking has helped innovations, etc.
I have four things to talk about. Regulatory and compliance will come in the last. The first thing comes is when you do disruptions, technological disruptions, innovations, you always feel that whatever I do is right, right? Because I have done something new I have brought in. इसमें चार तरह का चीज होता है. One is that you have your own self-rule. That your self-rule says that whatever you are doing right now is right, perfectly right, no worries. Second thing comes is that your organization or your family, they also have certain rules, right? And they tell you, no, what you are doing is not right. You have to come home at 7 o'clock, means 7 o'clock. You have to study mathematics every day 1 hour is 1 hour. That is your family rules. My rule says, मुझे mathematics नहीं पढ़ना है, मुझे तो sociology or environment पढ़ना है. You know, that kind of a thing. Third comes is your peer group. Like you might be disrupting, you might be bringing a technology, and your peer group, they are not accepting it. They are telling, no, it is unethical, right? That is also unethical. That is the third rule. And the last comes is your regulatory compliance and law of the land. So whatever we do, we have to think disruptions every day, innovations every day, but make sure that whatever regulations, compliance are to be done, must be done. One part. That is for the compliance and regulatory, sir. The most important in insurance in India from my childhood, when I say childhood, I feel myself 30 years experience I have in BFSI sector. I believe that I am only 30 years old. So I took birth in 1993 in one of the institution, UTI, Unit Trust of India used to be there. Now they have also merged. Somebody was talking about private public partnership, kind of a thing. ये बड़ा important होता है. From the childhood, I have been hearing that बीमा आग्रह की विषय वस्तु है. The insurance is the matter of solicitations. This is the Amrit Kal going on, and everybody is talking of that when India will complete 100 years. By 2047, 100% penetrations. Now, almost LIC of India is for 70 years now. They will complete 70 years after, in 2026, right? So that means they will also complete almost 90 years by 2047. Your insurance penetration is hardly 5% or 6%, even lesser than that. How the technology will help to penetrate 100%, that each and every person must be insured. When we saw pandemic like COVID, and we realized that there are many people, they lost life, they were not having insurance, their family on the road. So the actual challenge for us today is how to penetrate 100% insurance. Each and every person must have life insurance, health insurance, like we have vehicle insurance where you have a penalty, right? That is also one of the aspects for compliance and regulatory, to bring in something cheaper so that everybody can buy and be within the framework, regulatory framework. That is my answer. Thank you so much.
Thank you, Gyanandra. So just to correct your numbers to a bit, of course, I'm not an auditor here. So overall insurance in India is roughly to the tune of 4.12%, in which life is 2% and non-life is 2.12%, right? So, and the protection gap is huge, almost to the tune of 92% plus. So that's the gap. And we are expecting 19 to 20 more new insurance companies in India. With that, I believe the insurance sector will get a lot of momentum in India as well. Audience, I'll be coming soon back to you. I hope you're paying attention. So, as I said, there's a special gift. So I'm coming back to you, Kaushal. Maybe, we have a limitation of time. We have a few minutes left before I go back to the audience. Okay, so just before I come back to you, while Preeti was asking everyone about their, last tick questions, and I remember Tim saying, human psychology, right? So related to that, I wanted audience, if somebody or anybody would like to participate, otherwise I'll have to anyway give the answer. Which is the most difficult task to manage in life? Most difficult task to manage in life? And in case you are not getting the answer, let me tinker you more with which is the second most difficult task in life to manage. Any answers there? Okay, so everybody is silent. So most difficult task to manage in anybody's life is human resources, human lives. And that's where, Tim was answering, human psychology. So if you look around, managing people is the most difficult task. It's the most risky piece. And the second one, which is of interest to all actuaries, all bankers, is the cash, right? Managing cash is the second most difficult task in this world. Okay, so coming back, Kaushal, I have one more question coming to you as you are part of, Microsoft Teams and all our softwares, computers, mobiles, iPads, everything run on Microsoft and also many softwares. So what are the recent trends in artificial intelligence and machine learning to, improve predictive modeling of risk underwriting in the banking sector specifically, as we are talking of, this panel under the banking sector, but I would be happy if you can add something related to insurance sector as well. So over to you, Kaushal.
If you can ask the question again, sorry.
Okay, yeah, sure, Kaushal. So question is, what are the recent trends in artificial intelligence and machine learning, which I think our keynote speaker was also mentioning today, this morning, to improve the predictive modeling for risk underwriting in the banking and insurance sector? Your views, please.
So, while it was covered in the keynote as well, but in my point of view, there are essentially a few things that I want to share, and then probably others can also add. One thing that I'm seeing is the use of RPA and models a lot, right? What I mean by that is the capability of automation by and large. Example, right? You can actually scan a document, have the data in a digital format, push that data to a model, and quickly make sense whether that model is really helping you or not. And keep doing that as regulation comes in, work on it, make it much finer, feed in more data. That gets to the second trend wherein I'm seeing a lot of consumers okay to share their data. Right, with the fact that most of us have a device in some form and shape, whether it's a wristwatch, a smart mobile, an app on a mobile, the amount of data that is there. So that's the second trend. Initially, I think the amount of data that we were getting was limited, but now the amount of data by itself is exploding. Third, I'm seeing a lot of regulations coming around the use of data. Right, across different domains, across different sectors, and consumers by themselves being very aware of what data should they share, what not. While we still have to mature on that, but I think that's the third trend I am seeing. And the fourth one, which I am seeing a lot of us should work towards, is to understand a model before we use it. Right, so just for the sake of it, if you see a particular model giving an output or promising an output, don't use it till the time you understand really. So test it with sample data, see the outcome, do the regression with unbiased data, because a lot of data that we have today, especially in India, is limited to a cream set of audience who gets insured. So I think you should be aware of the kind of data that you are putting in the models. Make them unbiased by whatever means that you can get more data, and then put into production, which means into real life. So I think those are the things that I'm seeing as a trend coming in. You want to add, Pravash?
Yeah. So just to put it in a banking perspective. So you see today, a lot of AI models are available, and most of them are multimodal. When I say multimodal, you find a lot of different sets of data is going in, whether it is a structured data, whether it is unstructured data. These days, the audios, videos, everything goes into the data set or data model. We would have seen, as an underwriter, we do a personal discussion with the customers, and we record those discussions. That goes into the model. Something like today we use, the computer vision to estimate the stock level at a particular shop and all. You take a photograph, that will measure the depth of the shop. It will count the number of SKUs. So which usually takes a lot of time to, create a sense out of those data. 5 years back, we used to have 2-pager, 3-pager bank statement. Today, the bank statement is, because of UPI, it goes into 500, 600 pages, right? How do you analyze those data, and how do you put that into, system to understand and, put into the model? So a lot of things have changed, and as you rightly said, a lot of data will enrich the model. It will take some time, but definitely a lot of things are happening on this banking fronts. Thanks.
Thank you guys. So coming back to all three of you, starting with Gyanandra, last few comments, views, in case something is there in your mind, and adding to that, if you can add 2 words or maybe 5 words, how actuaries, actuarial science can help in your respective businesses. So starting with Gyanandra and then Pravash, Kaushal, just last 30 seconds, whatever you would like to share, and then I go back to the audience.
So I always say, actuarial means predictive science. It's the mathematics to be predicted that what will happen next. So we always look forward, right? The actuarial is nothing but the looking forward and thinking beyond, right? So I don't know today that in Bharat, which is rural India, how actuarial science can help to penetrate 95% more. He's telling 92%, but 92, 93% more. That is one part. The most important is when we talk about actuarial, we talk about technological disruptions, how customer-centric it is. Is it made for us for doing, ease of doing underwriting, or ease of doing our, selling our products, or it is also ease of doing for customers? Are we customer-centric? Are we thinking of, optimum use for those customers? That's very important. And is it going to help in turnaround time? Yes, I have been, hearing news that so-and-so insurance company, they have come out with disruptions, that you make an accident today, you hit the pole, and immediately you send the photographs and all, it is geotagged, and immediately you get the insurance premium paid to you, right? Claims paid to you. These are some disruptions coming up, but miles to go. Again, I'm telling you, miles to go to impact billions. It will take some time to penetrate 100%. That's more important, customer-centric.
Thank you. Pravash.
Yeah, so quickly, we have a lot of data. We are using data. Life of actuaries have become much easier now. But at the same time, manufacturing of fake data is also happening. And it is happening at a same pace. So the amount of original data we are collecting, we are also having fake data and fake persona being created and all. So as a responsible people over here, I would suggest we should, look at how can we mitigate those, whether it is a deep fake or, similar type of creating personas for giving, insurance, loans and all. So we should, able to mitigate that, and that has to be our priority now. Thanks.
Kaushal?
So I think I'll go with what Gyanandra ji said around customer centricity. I think that's the core with regards to any product getting adopted. However, for this audience, the one thing that comes to my mind is with power comes responsibility, right? And responsible AI is the key there. So I would urge each one of you to be acting more responsibly than what you are. You're doing that now. But with the amount of models that you will have, just reflect on what we just spoke And yes, with power comes responsibility. You have all the power to, to change the world.
Thank you, Kaushal. So I believe the time is up. Any questions from the audiences? And if you could please raise your hand.
Dr.
Once
Dr. Agarwal, can I request if you can take the questions during lunch? We are really...
Okay, so I think one raise of hand has already happened. I will just take one. Thank you
so much.
And then I would request, I would request the gentleman there, in the brown. If you can please introduce yourself and then ask the question, and the question is marked to whom?
Good afternoon, sir. And I'm Atul Tiwari, working for LIC of India. And my question is that all of you are just emphasizing the fact of AI, uses of AI. What could I understood from my little knowledge that AI can just help you out to put more preciseness in your data. That means for execution of any job, two parts are there, quantitative part and qualitative part. So quantitative part will be taken care by your AI, whatever is there. But for qualitative part, you require some experts, maybe actuaries or maybe whatever the field, CFS, whoever is there. But what would I learned that actuaries can help in certain extent for that. So I want to know that in Google or in that banking arena, whether are you using any actuarial service? Because so many times I think sir has asked Tarun sir how do actuaries can help, but nobody has precisely addressed the things. Really what actuaries can do. So is there anything like, yesterday I come to know that Uber is using some actuarial services. So whether are you guys using some actuarial services in your field? Because for that qualitative part, you still require that, means expert. So that's what I want to know. In Google or in banking and finance, is there any actuarial role?
Absolutely great. Thank you so much for the great question. Yeah, and that's what I wanted to add. So Pravash, just quickly, because time is over, just add a few lines, please.
So, when we say actuarial science, it's basically, analyzing a lot of data and predict, whether it is, as I was started with saying, what you do is basically understand the, what is the loss impact or predictability on the loss, and as well as the value of the assets and all, right? So those you can do through, whether it is in a banking or in insurance, you can do that through AI. Both quantitative and these days, as I said, the AI has evolved in a much better way so that you can also do a lot of qualitative things through AI. I gave few examples what you use in banking, but in insurance sectors and for actuarials, I do not have exact, examples right before me. But yeah, so, you can help with that.
Want to add something, Kaushal, quickly?
So I believe a lot of it is getting defined, right? You don't have a lot of it matured enough, and that's the beauty about this particular digital innovation that's happening. In fact, I would urge each one of you to party along. There's a lot of domain knowledge that you have, and the model that gets created will mature over time. So to answer to your question, yes, a lot of quantitative aspect is getting addressed. A lot of qualitative aspect will only happen when there's a lot of feedback coming in, a lot of work happening on that. So I would urge each one of you to party on the model correction, model richness, and make that model more evolved as you go on, right? Because with different set of data, that will keep happening.
So thank you, my panelists, thank you audience for being with us. Last statement which I can make is that navigating the regulatory labyrinth and overcoming the challenges of legal uncertainty is crucial for innovations and, as rightly going, data disruption and the actuaries to, really help us grow all around. Thank you, everyone. Thank you, panelists. So nice. Thank you.
Thank you, Dr. Agarwal, for the session. Thank you, panelists. Can I quickly invite Mr. Sumit Ramani to give a small token of thanks to our panelists and chair?